Hi, everyone. My name is Sean Tarzi, Managing Partner and Co-Founder of WealthCare Financial. We appreciate the time you're taking today to join us. We're going to be discussing the impact the coronavirus has had on our lives, the markets, and what we expect to happen and what you can do about it. So for the next 15 to 20 minutes, we'll be diving into how this time is a little bit different, what our expectations are, and provide you an opportunity to get your own WealthCare Financial roadmap. So we like to think that no matter where you are, whether you're already retired, nearing retirement, or even 5 to 10 years away from retirement, everyone's situation is different. So let's get started. The title of the webinar is Victory Over Volatility. So this is one of my favorite slides because it's going to show you how the economy and the stock market can differ during certain times. So since the Great Depression, we've seen tough times in the economy, but the stock market has tended to respond to a similar fashion, that of the American spirit, which is optimism. And the history reminds us that we should always and all be optimistic. The chart points out the years we had a positive return in the market with negative GDP growth. So if we check out 2009, at this point we were nearing the tail end of the financial housing crisis. We hit rock bottom March 2009, and as you can see, the market finished at positive 26%, but GDP was down negative 2.5%. But while the real GDP in the actual markets returns seem at odds, it's a reminder that our financial world is complicated, and the more information you have, the better. So let's take a look. Now imagine your working career started here in 1980. So in the last 40 years of working, we've experienced 6 different bear markets. So you can see all of them right here, and this is the last one that we're at. Each time we were able to recover, some more severe than the last, like it was in 2008, and who knows how this one will eventually play out and where the bottom will be. But what we do know that with government action and all of us working together, we will be resilient like we have in the past. Now, the scary part is that we are living in unprecedented times. So on January 11th, you can see China announce its first death. January 30th, the World Health Organization declares a global health emergency. And right around here, February 23rd is really where the market started to see an increase in volatility. A couple days prior to this, the markets were at all-time highs, hitting all these different records that we've never seen in the past. But now the death toll will start to surpass past pandemics. And as I mentioned, the market will typically price in good or bad news. The virus was able to spread so fast that it caused the closure of borders, stores, and even the economy. And that's why we experienced the fastest bear market in history. Usually, if we're heading towards a recession, it takes time. So the market says production slowing, we're winding down, the cycle's now coming to an end. But in this case, it was a very fast and rapid one. The good news is measures are now being made to get us on the right track, and it's changing every minute. Now, to put things into perspective of what happened in March, excuse me, this chart shows us the biggest Dow losses of all time. So if you look here at the top, Black Monday 1987, Dow itself lost over 20% in that one day alone. And now in the yellow, you're going to see what just recently happened, March 16th, definitely not as bad as Black Monday, but definitely up there to say the least. And if you look a little bit below that, you're going to see March 12th also as one of the top losses in the Dow in one day. So when I mentioned earlier how fast this bear market took place, you can see how you have 2 of the top 10 biggest percentage losses almost back to back. There's no mistake that the drops have been really big, but this is nothing we haven't seen before, at least as a percentage that we've seen as a drop is definitely manageable for us to get back to a recovery. So 2020, definitely a year of records. This has been a pretty crazy year to say the least. So on February 12th, the market closed at an all-time high, continuing the record-setting bull market run. Now, as Newton once said, what goes up must come down. On Friday, March 13th, we declared a national emergency. And on Monday, the 16th, unfortunately, the market got absolutely hammered, losing about 3,000 points in a single day. Then 8 days later, with talks of a $1 trillion stimulus bill, the market had its largest single day market gains. So why are we seeing these big ups and downs? Well, as our economy grows, our national wealth grows, and the speed with which information travels, so we expect to see more future ups and downs in the market. So what's in the $2.2 trillion stimulus? Well, a majority of the money was given to support business owners, to help retain employees, which is probably one of the best things that they could have done to help a lot of these businesses. Next is a direct payment to individuals as a stimulus that a lot of people were receiving. And finally, aid to state and local government. The government was able to get the money out in about a month, which is almost unheard of. Following the distribution of the money, the markets instantly responded, as this was a clear sign to be optimistic. And this was an example of how markets are influenced by promise. The idea of the stimulus package was designed to help us have something to come back to as quickly as possible. There might be more stimulus coming, but there's no doubt that we will need to be prepared for the future changes that we'll be seeing. So let's compare how this differs to 2008. In 2008, it was an issue with the banks. You had companies like Bear Stearns and Lehman Brothers that were highly leveraged, and basically what that means is that these companies were borrowing money to make investments. And unfortunately, they invested in mortgage-backed securities. And when the investments started to go sour, these companies couldn't pay back their debt and unfortunately went bankrupt. These banks weren't being paid back the money that they lent, which caused significant issues in the financial industry and as a significant credit crunch that was happening in the financials. So that's what ended up causing the market crash of 2008. But now today, 2020, it's a healthcare crisis, which is unfortunately causing a financial crisis as we speak. And this is happening because there's very few people working, traveling, or even spending money since the majority of the country is in quarantine. So what does this mean for a future recovery? So I know during this crisis, most of the news we've been listening to is bad, but some good news is that the banks themselves are well capitalized due to the regulations that happened after 2008 and 2009. The other part is that the recovery will eventually happen, but we don't know when, but hopefully soon. We'll eventually see recovery as the virus takes its toll. As a society, we'll get better and we will overcome this illness, and in time, vaccines and different treatments will be made available. Until then, the media is at play with a society where information is all over the place with social media, Twitter, Facebook, and this is causing a lot of fear and panic. And due to everything from sporting events, going out to dinner, going to weddings being canceled, we don't really have those distractions to really help us not watch the news. So we're really getting into the habit of listening and reading everything that's coming out, whether it be good or bad. And this is what's really kind of scary and scaring a lot of people is as far as what's going on in the market. So what's next? Let's talk about our expectations and what a potential recovery will look like. So many economists are throwing out U-shapes, L-shapes, and V-shapes. And I want to talk about those different shapes and what they mean to a recovery. So in order to see an economic recovery, we need to see how quickly we're able to overcome this health-wise. With our health system finally getting back to normal, will we eventually have a second wave? Are we going to be ready to reopen schools in August? When will people be able to go back to restaurants or bars or even a hotel? How quickly will the government be able to keep people afloat? And lastly is the impact of jobs. Unemployment numbers are just tremendous right now, and they keep coming out more and more. But they keep increasing as companies are laying off people. It's anticipated about 30 to 40% of small business owners won't be able to open back up once things get back to normal. And that's devastating. These are all questions that we don't know, but these are the types of questions that are going to impact the eventual recovery and what it will look like. So here are the different types of recoveries, as I mentioned, the U, the V, and the L. So let me take you through each one and show you how each one works and help you understand a little bit better. So over here we have the U-shaped scenario, which is a recession then recovery. It obviously resembles a U. The scenario takes certain economic measures such as employment, GDP, and industrial output. What you want to notice is the fact that it's a gradual down and it's a gradual up. The good news is a U-shaped recovery is the fact that afterwards GDP continues to come back to where it once was. And basically, I would say about half of the US recessions that we've had were U-shaped recoveries. And we can look at 1945, 1973, and 1982 were definitely clear indicators of a U-shaped recovery. Now, the V-shape. You have a sharp decline and then an even stronger recovery, then back to where we once were. This is the most likely scenario just in regards to how quickly it went down and eventually how quickly it should recover. A V-shape is the best case scenario, which is what we all should be hoping for, because it means our economy came back stronger than ever. This comes back to how long it will take, which will be determined by getting back to business as usual, how long we are going to be social distancing, and when will we have a vaccine or treatment commercially available. The recession of 1953 is a clear indicator of V-shaped recovery. Now let's talk about the L-shaped recovery. This is every economist's worst nightmare. The L-shape goes down sharply, then comes up, but most importantly to note is it doesn't come back to where it once was, so it's a little bit lower than where the GDP previously was. Most analysts aren't expecting this L-shaped recovery. However, depending upon how people are feeling with the bearish scenarios that we've seen, people are assuming that social distancing will never go away and we're never going to be able to return to life as normal. Unfortunately, I don't see it going that way, so I typically like to hope for the best. So if we look at Greece in 2006 and 7, that was definitely an L-shaped recovery. So what does all of this mean to you? You're going to be in one of these three scenarios. You're either going to be retiring this year, or retiring maybe in the next 5 to 10 years. So let's address all of these different scenarios to see where you fit in. So you're retired. We've all heard the old saying, cash is king. Well, our saying here at WealthCare is that income is king. No matter what age you are, whether you're 75 or in the middle of your career, if you have a good, steady, reliable income, you can weather storms like this, because as long as you have a monthly check coming in that are not being impacted, then you could pretty much go through anything that the economy has to throw at you. I really want to highlight the first part, which is the income stream. That's the most important thing to rely on, which is the foundation of your retirement, if it's properly implemented. The problem is most retirees rely on their market portfolios for their retirement. Since only 15% of companies offer pensions, I would say that most people will not have a pension and they're going to be living off of their income. And it's unfortunate because most people that were affected still need to draw income from their retirement portfolios. So we like to look at making sure that people have a guaranteed income stream. So other things they're going to look at is tax codes that can be complicated, but Roth conversions and other tax planning strategies might be a benefit to you at this time. You may have the option to convert your assets to a pension to give yourself an income stream, as I mentioned previously, very important. Next, we always mention that having an updated estate plan and making sure that long-term care and healthcare planning is part of it as well. We certainly hope everyone stays happy and healthy during these times, but it's always smart to be prepared. Also, make sure you have a professional by your side to walk you through this tough time. Somebody like us here at WealthCare Financial. Now, let's say you're approaching retirement this year, and it's by far the most unfortunate position to be in. First, you want to make sure that your budget matches your needs. If not, you may want to take a look at cutting back some of your expenses, at least until the storm passes. The same idea with Medicare and Social Security. What are those costs going to be? What is the best time to take Social Security? And lastly, by lowering your debt as you transition into retirement, it will free up income, and this will allow you to enjoy your retirement. Lastly, if you're going to retire within the next 5 years, this is the tough part in regards to how quickly does a recovery happen. It also depends on things like your job and how reliable it is during this time. So some things to think about is, what's your ideal lifestyle? Make adjustments to your budget so this way you can plan for some vacations and enjoy the things you want to do when you retire. Next, you're going to evaluate your debt. Will you have your mortgage paid off? I suggest to think of us as a retirement consultants. We are the expert guides, and we can help you build that roadmap to retirement. So now let's talk about WealthCare Financial Roadmap. It's an opportunity for you and I to continue this conversation with a 15-minute strategy session to see if you're on the right path to retirement. We here at WealthCare Financial are very proud because we follow the 5 essential fundamental rules that need to be addressed in every plan. We have income, investments, healthcare, taxes, and legacy plans. These are the 5 interrelated components of the roadmap, and these questions are ones that you should definitely consider. How much income do I need, and how much of it is guaranteed? Next, we'll discuss investments. Let's run through a few different scenarios, putting your market portfolio through different stress tests so we can see what the impact during a bull or bear market will be. We utilize many different financial planning softwares so we can educate individuals to make well-informed decisions. These are all crucial questions to develop an income and investment plan, and most importantly, making sure we don't run out of money in retirement. Now, tax planning. What are today's tax brackets and what might they be for the future? Due to the current market conditions, you may be able to offset future gains to lower your taxes. Then we have healthcare. We'll be talking about things like Medicare, health insurance, health savings account, and most importantly, long-term care planning. So what happens if I go into an assisted living facility? What and where will I generate those assets to pay for it? And lastly, legacy planning. Do I want to leave assets behind to the next generation? Also, what can I do to minimize the tax burden for the next generation? These types of questions are important no matter how far or how close you are from retirement. These are questions that you still need to be asking yourself, coronavirus or not. And that's what the planning process does. It helps raise these questions to take a look at a bunch of different scenarios that are customized to you. Then you select a plan that fits your goals, risk tolerance, and your income needs, and everything else that we've talked about. So you can confidently answer, will I be okay? So the next steps, and what do you do now? We encourage everybody to take action. Let's keep talking. You can schedule a complimentary 15-minute strategy session with us. The online calendar is the next easiest way to find a time to talk with us that suits your schedule. You will see our online calendar page. We will be opening it up for the next hour for those who have joined us today. You can offer a phone call or an in-person strategy. You can always feel free to give us a call or email us at ask@askwealthcare.com. You will be now taken to our online scheduling page. We look forward to connecting with you soon. Thank you for your time, and please stay healthy and stay safe.